Hi, this is JC Peretz with Eagle Bay Capital, and today we're going to talk about two different stocks. The first one is Twitter, and the second one is Kohl's. The Kohl's is a longer term chart, so we'll start with Twitter, which is much more short term. The IPO was on November the 7th, and that particular day, the high was right around 50 bucks. It immediately sold off and eventually broke through that and went to $75. Since then, the stock has come down substantially, found support in February, where? At $50. I don't think that was a coincidence. We went on to rally, and this week, what are the closing lows in Twitter? Again, $50. So the market has memory here. This is a very interesting level if you're looking for an entry point, because the risk reward is definitely in the favor of the bulls. If you're wrong and Twitter rolls over and breaks $50, then we don't want anything to do with it. This is a name we only want to own above 50. So what's the catalyst that's going to take this name higher? Well, we can look at the short interest. About 40 million shares are short, which is about 11-12% of the entire float. More importantly, momentum hasn't gotten into oversold conditions. Momentum remains in bull mode. So that's a good thing. Then we look at the volume. Volume has slowed down tremendously. Over the last few weeks, we've seen some of the lowest volumes that the stock has ever put in. This has essentially become a forgotten name. Who talks about Twitter anymore? With S&P 500 hitting new all-time highs and Twitter essentially making new multi-week lows, it's a forgotten name. I like it right here, right now. I think it goes to 75 bucks at least. The second chart is a chart of Kohl's, KSS. So what I like about this one is the huge base that we've seen develop really since 2009. As they say, the bigger the base, the higher in space, and I think that's precisely what we see here. Tactically, we want to stay long above $53. We have a target somewhere in the 80s at the very least, but realistically, we can exceed that and go substantially higher, because that's what happens from these big bases. You know what it reminds me of? It reminds me of the Dow Jones Transportation Average at the end of 2012. Nobody was talking about it. It was underperforming. And what happened? After it got out of that big base, we saw a monster rally in 2013 out of the Dow Jones Transportation Average. Those were the leaders. Why? Because they were coming off of a big base. I think the exact same thing happens in Kohl's. So those are the two names, Twitter, TWTR, and Kohl's, KSS. Again, my name is JC Peretz with Eagle Bay Capital. Make sure to read the blog, allstarcharts.com. Follow us on StockTwits and Twitter at AllStarCharts, and our Tumblr page at allstarcharts.tumblr.com.